Welcome. Today we are going to answer the question: what is a mutual fund? A mutual fund is essentially a pool of money or investment capital from investors that is collectively used to invest in a large group of assets, also known as securities, such as stocks and bonds. Mutual funds are professionally and actively managed by the portfolio manager or fund manager. Actively managed means it's the manager's job to buy shares that rise or fall in value based on the performance of the fund's underlying securities. Some of the benefits of investing in mutual funds are simplicity. The fund manager does all of the hard work. Professional management done by the fund manager. Relative affordability. Most mutual funds usually require a minimum of $500 to $5,000 investment. Diversification. This is extremely important because your money is spread or diversified between many assets. If one company fails, you don't lose all of your investment. Some of the disadvantages of mutual funds. Fees. Regardless of how the fund performs, you will incur fees that are usually paid annually. This is for the services the fund manager provides. This is also known as expense ratio. No control. You may feel that your hands are tied because you have no control over the fund's purchases, nor will you really know what assets make up the portfolio. So, how do mutual funds make you money? Dividends. Usually paid quarterly, sometimes monthly. This is interest that has been gained on the fund's securities. This money is then divided up and paid out to its investors. You can choose to cash out on the dividend or reinvest it. Also known as DRIP. Capital gain. When securities have been sold after they have gone up in price. On the flip side, a capital loss is when the security was sold following a loss in price. Most of these payments are made to investors annually. Net asset value. When the value of the fund increases, the price to purchase also rises. The value of your investment is greater. How can you purchase mutual funds? Employer. Check with your employer to see if they offer an employer-sponsored retirement account. Traditional or Roth IRA. Individual retirement account. Opening a brokerage account with a financial management company. 401k is another option. Hopefully, you now know and understand the basics of mutual funds. Always do your research before making an investment so that you can make an informed decision. If you enjoyed this video and would like more financial information, please subscribe to the channel and hit the bell for notifications. Have a great day.